Hi, good evening, everybody. If your life is worth living for, then it is worth planning for life. So this is Xian and welcome to Finet SG with Xian Wei. Let me get started right away. Hope you had a good dinner because we are here for 20 good minutes on episode 15. We've been on this Finet SG series for 14 episodes already and we're on number 15. This time we are talking about TSMC Part 2. Before I begin, let me introduce myself to some of my new friends here. I am Xian Wei and I'm in the business of investment risk management. So that's my professional practice. I've been a client since I was 25 of Unicorn for 5 years at that time. So when I was 25, I had an asset of $25,000. And after 5 years being in a good relationship with Unicorn and also allowing them to unlock my wisdom and also make very good decisions, after 5 years, I amassed $200,000 worth of assets. So from there and two trigger events that happened in my life that is family related, that really spurred me to want to take this business up as professional practice to really venture beyond myself and to benefit my parents and my loved ones and friends. So welcome, then this became the birth of Finet SG. Okay, I start with disclaimer first. Anything that I share here is purely informational. If you see it as an advice, please PM me. It is really purely informational. Okay? And I would love to get started with my friends answering these questions in their heart. How would you like to outshine your current financial position? Wherever you are, my friends, whether you're investing or not investing, this is a very important question for all of us. How would you like to outshine your current financial position? Okay, with that, I get started. There are three things today. First, definitely the economy and financial market updates. For that, I have three good things to share. So the first thing I want to come clean with you is this tit for tat tension. I feel that this is very like a children's playground, between the US and China. So this was the story where the US is asking the Houston office of the China embassy to stop operations. And on the other side in China, also asking the US embassy in Chengdu to stop operations. So they're having this tension, which may be undershadowed by our current pandemic news, that a lot of people are really looking out for what's next after COVID-19, but undershadowing this tension that is going through. And I believe this tit for tat tension will carry on because in the first place, US and China have really opposing interests on this. US is definitely not looking forward for China to take over them. So this China-US rivalry is very real. And China also would like to take over the US. So in that sense, definitely the tension will carry on. And some of my friends actually asked me, what is the effects if they have this tension? Well, very clearly, if US were to be taken over by China, let's say their trade, the trade in the world is no longer using USD, then with the debt that is given by that the US is having, would probably lead them to bankruptcy very, very quickly. And that is really something that US does not want. And that's why there is this withdrawal, and this fight towards China. And what is the effect on China then? So for China, the effect is that, well, we are all very clear in terms of Huawei. Then, for example, the case study that I'm going into, TSMC was also asked and ordered by the US not to supply the semiconductor chips to China. Okay? And this causes an opportunity or also a threat to China because it forces China to set up their own semiconductor company. And because of that, as I've mentioned last week, for TSMC, right, it's actually quite a high capital or capital intensive business to be in, that you really need to come up with a lot of capital in order to be profitable in here. And on top of that, they are actually behind the race. And the race is very important because this incremental learning will help in creating this tech supremacy. So I use tech supremacy because this is also the reason why there are tension between US and China. Because in the first place, if whoever is supreme in technology will definitely almost take over the world. Almost like a Marvel hero story. So that's the news. Secondly, expiry of the $600 per week unemployment benefit from the US. So at that time, that's the debate between Republicans and Democrats. So Republicans, after expiry, right, they are given a chance to have a debate on this again. The Republicans say that's really providing too much for them and it doesn't motivate people to go back to look for a job because they can be comfortable with this $600 a week. And Democrats debate, the side of argument from the Democrats is, well, if we give them less, we actually don't have any jobs to offer in the first place. So with that, right, that came to a decision, and it's just of recent, yesterday as well, that Mr. Donald Trump, the President Trump, has signed this $400. So they came between. So, well, now they have to sit in and balance out with this $400 per week to go through it because both sides also speak well of their views. And the third point for financial market updates, it's this Europe stimulus package breaking new ground. And the biggest reason, Europe is almost like Germany. You know, ich spreche ein bisschen Deutsch und ich liebe Deutschland. So I'm speaking a little bit of German because I do love Germany. That was the previous job that I was in because I really love the cars from there. And I admire Germany because I also have family there. Because they were very, very careful about their fiscal restraints. Very, very careful about their spendings. After World War II, after what happened in World War II, they became very, very conservative, meaning that they don't spend what they don't have. So because of that, that reminds me very much of how MMLE has guided us or led the nation, that we really have a lot of opportunity at this point in time to be helping out in Europe. So for Europe, there comes to be this stimulus package of 750 billion worth of euros to help Europe for the next few years, minimally until 2024. So that is already very supportive, point number one. And also the joint borrowings. So it's not just going by country in managing the interest rates. It is going in the whole of Europe to help understand how to survive in terms, simply put, to survive as a Eurozone. So that is actually very optimistic and promising from Europe. And most importantly, I was just having conversations with my ex-boss, who's now a really dear friend to me, that Europe actually tackled very well for COVID-19. They really waited for that curve, for the number of cases to reduce to a point which they can reopen the economy. They were very, very patient. And that helped them a lot because the impact of resurgence did not really occur in Europe. And after calling my friends from the Netherlands and also chatting with some of my friends from Italy, they are actually comfortable with the situation in this moment, COVID-19. They even have their own summer break for 3 weeks over there. So Europe, I would say, is quite a bright spot. So in terms of the mid-term to long-term investment decision, I would say that it is something that we can look into in the near future. Okay? Then I move on to the case study for TSMC. Okay, that's what I have started last week, and I would love to continue with the other 3 tenets. So how Finet SG has started was to really share with our friends here on the environment that we're in that categorizes the companies into 4 types. And TSMC is in structural growth. So with that, then we will go deep into the analysis. And the analysis will consist of these 4 tenets: business, management, financials, and valuation. Please take note that they are in order of importance. And last week was the one that I spoke about in business. Today, we will continue in management and the other two as well, financials and valuation. So that was last week, business on growth and resilience. And today we talk about management, and that is stability and its culture. So stability-wise, I would say give a good introduction to Mr. Maurice Chung. He started this TSMC in 1987. So prior to that, he was actually working for Texas Instruments. In the past, there was no such thing as semiconductor, the foundry that produces semiconductor chips. They were all called integrated manufacturing devices. And he was working in Texas Instruments, which is a competitor of Intel. So they also design, manufacture, and sell. So it's the entire chain. And he realized one business opportunity there. The designers of the devices or the chips actually wanted to start off being their own bosses. They feel that working for these manufacturing companies were not enough, and they feel that it's quite inefficient in that sense. So Mr. Maurice Chung actually saw this opportunity and also decided to form an independent foundry for this semiconductor chip manufacturing. And that's how everything got started. So of that, you can see Mr. Maurice Chung has really put up a very long service worth of leadership of 25 years, starting out in 1987 to 2005. Then he passed it over to Rick Tsai, that for four years, quite brief. Then he took back the leadership until 2018. And that's where Mark Liu and also Wei took over in 2018. And I feel that this long service stewardship as a leader with very little change in terms of management proves to be very stable in the opinion of understanding it as a good management tenet. So, and the people he passed on to, Mark Liu and Wei, they have also been in service for a long time in TSMC. So it's not so much of really just passing over to a younger folk because Mr. Maurice Chung is already 89 years old, but also because of their long service that they are really very involved and in touch with the company itself. Okay, so that is the really good part about them having this very strong long service stewards as leaders. And most importantly, the next thing that we're talking about is culture. And culture is best shared by this Jensen Huang, the founder of NVIDIA, is also a very close client and partner of TSMC. So they are the ones that actually also design and seek TSMC's help to manufacture their chips. So as he has mentioned in this conversation, most of the people who looked at the foundry industry thought that technology and capacity were important. They really missed what ultimately made TSMC extraordinary and more powerful is incredible focus on customer service. So he continued, I remember when you called and said, and I've heard several thousand times since then, we will jump through hoops for you. And every employee believed in it and lived by it. That to me is very important because in the first place, the willingness to go through the extra mile for customers is something that I strongly believe in as well. I'm blessed to be in this environment that can actually help me to also live out this extra mile benefit to the people that I care about. It's an extension of my kinship, my friendship with the professional practice that I have, which resonates very well with this culture that TSMC have. That is really a very good edge to their financial success, which makes them a very strong company. And you can see from the last sentence, every employee believed in it and lived by it. You can see very clearly that Mr. Maurice Chung is really a good role model, that the employee also believed and lived by it. So this is the culture that really gives fulfillment, to really help people to not just work, but really work for the benefit of others. And that's the most powerful way of running a business. And that gives TSMC a really good plus. Okay, then I'll move on to financials. Of course, we don't avoid this, and we take care of this very well in terms of growth and profitability. For that, TSMC revenue and profit growth. First, we look into the revenue, and there's an increase of 155% over this period of time, 19 years. So if you break it down, sorry, not 19 years, 9 years. If you break it down, it is about 10.9% per annum of growth, year on year. And for the profit growth, the operating income growth is about 165%, which gives it a 11.4% per annum growth as well. So looking at structural growth criteria, they have actually met it in terms of its year-on-year double-digit growth. So that is great. And also in terms of that, the profit itself is also at 30 to 40% profit margin, which is very, very healthy. Last but not least, on valuation, I just want to re-emphasize on this valuation. It's not in the early days like Mr. Benjamin Graham or even Mr. Warren Buffett in his early days that valuation is everything. Why so? It's just for now, today, we are looking at valuation so that we don't pay a ridiculous price. And in the first place, it being the fourth TNET out of 4 really says something about it. We just want to make sure that we don't cross the boundary in being so ridiculous in paying for a price for just a very good quality company. But in the past, if we just keep focusing like how we have evaluated in the past, just purely on valuation, we are probably going to end up buying a lot of lousy companies and will not make money from it. And that's not the philosophy that we're going for, especially not in Unicorn, where we really focus on wealth creation. Okay, so that is one thing. Then we just look at the TSMC share price trend. So you can see the increase in share price is close to 500%, whereas the increase in operating profits is 165%. So make sure we pay a reasonable price, and in Unicorn, we generally put it at about 3 times the price earnings growth ratio. Okay? Okay, as you can see, so the valuation boundary that we're looking at, current share price is a little bit dropped from this new Taiwan dollars of 435. The projected earnings per share is at 18.28 new Taiwan dollars. So looking at it, the price to earnings ratio is actually 24 times. Then projected growth rate, my expectations is that without any major upheaval, it will continue to be as expected at 10%. But I must share with you that semiconductor chip companies are generally more volatile. Okay, so looking at the price earnings growth ratio is at 2.4 times, which is something reasonable in understanding whether it's reasonable price to pay for it or not. Okay, so this is the view on TSMC. Just to let you know very clearly, it's not an investment advice. It is just an opinion. So please seek really professional investment advice, or even reach out to me if you want to know a bit more about what's happening in this view. So the reason for sharing is just to let you know after analysis, what can you do about it? And after that, I also want to share with you what is the action plan. So in terms of growth, we can see very clearly already from last week, long-term growth underpinned by the growth in importance of the order, in order of the importance. So it's the Internet of Things, wireless communication, artificial intelligence, and autonomous electric vehicle. So looking at the other two, artificial intelligence, it does require a lot of data at a very fast pace to really have this very good interaction for artificial intelligence. And what's more, autonomous electric vehicle is no longer a dream. It's already live as we are talking. So that also requires a huge amount of data and to really make decisions like a human being when the car is on the road. I know this very well because I came from the automotive industry and I know how painstakingly we have to take care of this portion because it involves moral debates. Yeah? Secondly, there's a reduced competition when it comes to resilience because of this incremental learning. So like global foundries, they have dropped out from this 7 nanometer chip that they are producing because it's too high a cost and they are already losing billions on a yearly basis. So they have to make a decision and just stay on a lower margin by providing second generation semiconductor chips, while the rest of the competitors continue to become smaller and tinier, which is really close to just the size of a few cells. Okay? So on management today, we looked at it, it's quite long-term oriented. The way the leadership is selected is really very based on long service award, the stewardship, and investing for the future, and customer-centric culture, jumping hoops, and even the employees believe in it. Then we look at the financials, very consistent growth, good profitability because the margins, as I shared, is between 30 to 40%. And the valuation at the moment is reasonable at 2.4%. So with that, I would say if you do have a lot of idle cash and you feel that it's something that you can start taking into your portfolio, you can go for it. Why do I say idle cash? Is because at the moment it jumped, the share price jumped 15% due to the news from Intel that they have outsourced for reasons of various reasons and the lack of supply at the moment, that they really need to seek for advice and help from TSMC to manufacture chips. For that, since it being volatile, then there might be a chance that it might come down to a more reasonable price to purchase. So that's all I'm saying. And once again, this is not an investment advice, it's just an opinion from my side. Okay? So in terms of that, actually what can we do after understanding the wisdom that we have gone through? First things first, you can really start by acting on it, really doing it on your own, because after the many episodes of various companies that I've gone through, you might start to already understand how to begin analysis. And rather than taking it as knowledge, I will really ask you to at least be exposed to it and start doing something. Because remember, as one of the episodes I shared was about Tina, there is no alternative. So if you remember, a lady's name very clearly is Tina, simply because even if you're not investing, you're forced to be in this investment game because of the polarized world we are going to be in due to the pandemic. If you want more information, you can hear from me, but let's get yourself started. And also, if you feel that this is really something useful, share with your loved ones so that they get to experience and be aware of this new environment, economic environment that we're in. If not, the second thing you can do is really seek professional partnership, because how to really optimize your resources is very critical now. This is the round table of 8 that I share with you on the services that Unicorn has to really help you allocate your resources very optimally. And coming in deeper in discussions with you would be ideal, rather than me sharing in general what all these are. But this can be the following services that you can think of at this moment. And anything you can always ask me for opinion. Okay? Well, Mr. Warren Buffett always teaches me something, so I always end up with him. If you don't find a way to make money while you sleep, you will actually work until you die. So that's something Mr. Warren Buffett shares, and I resonate this very much, and I hope that it will also inspire you to do something. Okay, last but not least is what I can do for you. Firstly, advisory on your cash flow management and budgeting. Secondly, advisory on optimizing your resources to increase the overall returns on your assets. That's very, very important at this point in time, yeah? If not, I will see you next episode on Tuesday, next week, 18th of August. Well, really a lot, 8 there. On the same thing, at least update each other on the economy updates and financial updates. And the highlight, I'm not sure if we're continuing with structural winners. What do you think? Well, if not, I will thank you very much for this evening for joining me live on Facebook as well as on Zoom. If you have any questions, please feel free to scan it or just reach out to me directly on whatever questions that you may have. If not, I will see you next week. Okay? Have a good evening, everybody.